Hey everyone, this is Dean Clark with the Dean Clark Group Remax on the Hudson. This is another episode of the podcast that we are doing every single week to inform you on what's going on and how we see it. So in the last week, we've had 41 under contract properties. In other words, 41 buyers have written offers and they are okay with moving forward on a number of deals. The price range is as low as $150,000 and it goes up to $2.3 million. Actually, we've had quite a large number week over week of the $1 million properties in the jumbo market actually going into contract, which is kind of cool to see. And so we had 217 Willow, 117 Harrison, respectively 1.1 to 1.3. And the majority, as I've been saying week over week, is really between $250,000 to $700,000, $800,000. That seems to be it. In terms of the cities that are actually getting the most action, Hoboken is still on the lead with approximately 11 properties that went under contract, and then followed by Jersey City, and then West New York picked up pace a little bit, and we saw some under contracts there. So what I want to take a little bit of a different approach this week to really, just share my own thoughts on how I see this playing out. I mean, we are in a price range market. In other words, $250,000 to $500,000 is the range that seems to be the most active. We might be seeing more suburb markets, anything outside of Hoboken, Jersey City, actually getting more of a push of buyers looking to transact. And I can tell you from my own experience, this is just me, I have listings in pretty much every single market right now, and the majority of them that seem to be working, there's a hierarchy of actual value in terms of the property and how they see it. I would say number one is vacancy. So if you have a vacant property, that's like back in, if you remember, Hurricane Sandy days, and that was when you had a property that wasn't flooded, that was a big selling point, and all realtors and everyone in the marketplace was promoting that. So if you have a vacant property, you are in the driver's seat right now. And then secondly, you got to remember too, this isn't a I wanted to really point this out because this really isn't like 2008 and 9 and 10. And I think a lot of people are trying to, this is just like those markets. But when you look at supply and demand, the dynamic is much different nowadays. The consumer, the buyer, is in a much better position financially. What you had back then was a complete deleveraging, and it was a financial crisis. This is a health crisis. This has nothing to do with really, financials. Most people are okay, at least in the marketplace that we are in, which is the northern New Jersey coast. And so, you had housing starts, which are new permits where builders, look to build and do everything. They were down 20% in March. But what's interesting is the first 2 weeks of March were positive. So that was pretty interesting. You wouldn't expect that. So it only went down because of just the stay-at-home orders. And we're also seeing a spike in renovation spending. So repair, remodeling, everyone's being at home. They're like, hey, what can I do with the properties? You know what I mean? So I'm really starting to see that being more of a trend right now. And home building still has, the home builders and the developers still have money. They're just waiting on the sidelines. So again, it's not a financial issue. It is more of the way I see it, just a health crisis. But now you have to, but what does that mean, right? If you have a health crisis, does that mean that you feel comfortable being productive out in the marketplace to generate revenues for the next few months, 3 to 6 months from now? And I think that's really where the economy might be taking a hit. It's the lack of productivity than it is just about, I lost my job, I don't have a lot of money. Yes, that's happening, don't get me wrong. I mean, unemployment's at an all-time high, but again, remember, this is at an all-time high for a specific reason. I think there's a lot of pundits out there that are talking like this, and for our local market, hyper-locally, Hoboken, Jersey City, Union City, up the coast to Edgewater, West New York, North Bergen, a lot of us have our jobs, thank God. Many people are in a much better position financially to afford property. So the marketplace, the way I see it, is frankly in one of the best positions that it could be in once everything goes. So I think it's going to kind of do more like a W type of move. So it's going to come down a little bit right now as you have no real activity happening. Then it's going to shoot back up and then you're going to start to see it come down again in 6 months to a year from now. And so if you're a seller, my recommendation is, look, if you have a reason to really move and get this and get the property sold, do it now. Buyers are still making offers. I just sold a property off market, sight unseen yesterday. If you can believe that, just started a turn review on something personally that we had a buyer that we reached out. It was a Jersey City property, and we ended up getting it done. So, the truth is there is a way to figure this out. There is a way to get property sold today, and the good news is the numbers are ticking back up. Under contracts, active listings have hit the market in droves. We've had a total of over 50 listings in the last week hit the market. Now we're definitely up by 12% week over week. So, I'm just saying, look, if you have a reason to move and there's motivation behind it, whether it is to buy or sell, then this could be the time to do it. So give me a call. Let me know if you have any questions at all. Feel free to text me as well. My number is 201-240-8319, or you can email me at dean@deanclarkgroup.com. Thanks again for listening. Stay safe out there, and I'll talk to you next week.